Hello followers of the 4-year journey, this is Bob Lucas again here on March 29th, 2023. I hope you're doing really well. Sorry about the delay between videos. The last one was back on January 10th, I believe, almost 3 months ago. Of course, it's been an exciting 3 months, at least as far as I'm concerned. I believe very firmly that the 4-year cycle is now confirmed. Back in that last video on January 10th, that was not necessarily the case, although it certainly felt to me as if the market just did not want to fall lower. Plenty of signs that accumulation was undergoing and that the market could release higher. Of course, it was more of a feeling at that point than anything else, but ultimately was good timing. I'll go over the 4-year cycle being confirmed. I'll also talk about climbing the wall of FUD that we're seeing and the chances of testing prior lows, talk about volatility. That's going to be very important to understand. I've talked a lot about volatility in the past, but this is something you're going to need to fully embrace and appreciate if you're going to be able to hold for the next cycle. And then, of course, I'll try and give you that little pep talk about staying the course and understanding what it is you're trying to do here over a longer period of time. So, weekly chart right here. Okay, this is exactly right here on this candle, January 9th, January 10th, when that video was released, around 17.2, 17.3. That's where we added the final tranche in the model portfolio. Essentially, what the reason for getting in there, even though we were pretty much only 10% off those lows back in November, was me looking at the 60-day cycle and looking at this weekly, and basically with all of the FUD that was out there at that time, understanding that the market was not responding anymore to the downside. There was just, it appeared to me that sellers were exhausted, that there were new buyers in the market, and most of the metrics were just oversold to a point where I felt, at least, that certainly there was some more downside. It wasn't like a prediction that market was going to scream high at any moment. It was more a calculated idea that we were so deep in the 4-year cycle decline. We had seen so much negative sentiment build up, so much selling, and the market didn't want to move lower, that I felt that if I'm going to hold for the next 4-year cycle that was around the corner, that was an opportune time to fully load up on the portfolio, knowing that price could still drop to around about that sort of $12,000 level, which a lot of people at the time were talking like it was a certainty coming. To me, getting in at 17.2 made sense, knowing that that downside risk still existed, because I felt so strongly that the next 4-year cycle was about to begin. Timing was just right, and therefore getting that position made sense. I think I also mentioned in that video that the way this was structured, Bitcoin could scream up to 28,000 pretty quickly, and not getting your position there, you could leave yourself sort of locked out of a rally, not being able to buy when you're just seeing prices at the $15,000 to $17,000 range. And that's exactly what happened a day or two after that video. We went from 17 to 21, and then the following week to 24. And ever since then, the market hasn't given folks looking for pullbacks really an opportunity to get in. And that's really what an early cycle market or an early sort of bull move will do. It'll leave so many people behind who are just afraid of entering because they're afraid there's always that one more drop to come. And of course, at some point, it doesn't come, it ends. And it ends on bad news, right? Because when we have a major sort of trend change or turn off a bear market like this, it just takes a lot of faith to believe that trend is over. But at some point, you have to make that leap of faith and get in, because it will turn as it has, and then you'll end up in that position of not knowing when to get in, afraid to get in. And I suspect, even seen today at 28,000, a full 60%, 70% off those lows already, that there are some folks out there still thinking that we're going to see 15, 13, 12 and below, so they can't buy at this point. And that's how we climb that wall of worry in the end. That's what early phase of a new trend is mostly about. So why is the 4-year cycle now confirmed? Well, essentially we've got to look at the monthly for this. And first of all, this is just a really, no other way of saying it, really a sexy chart as far as I'm concerned on the monthly. One, because we have confirmation once you close above that 10-month moving average in a trend, that trend is broken. That's just the way I operate, at least. You can close 1 month above that, but when the consecutive months after that close above that level, in general, the trend is over and we're now establishing a new trend. But this also occurs during a time when the 4-year cycle was already due. And it was certainly due by January timeframe when we had that move. The actual low is in November. You could mark it there. I like to mark it here because the cycle wanted to turn lower one more time, as you can see on the weekly, and did not. And that's really where the turn happened. So as far as I'm concerned, this green candle here marks the first of the cycle. It doesn't really matter in the end. What's important is that we were waiting and expecting this turn in the 4-year cycle to occur, and it's happened, and it's happening at a time when there's an extreme amount of FUD out there. And that's what I like to see. I like to see a market or an asset go against the general sentiment, go against all the narratives that are out there, because those narratives are 2022 narratives. Those are bear market narratives. And even the news, they're either based on events that happened in 2021 and 2022, talking specifically sort of Binance, FTX, rug pulls, SEC actions. They're all as a result of what was occurring during that bear market phase, and of course the bull phase as well. But they're basically last cycle events. And the market has already sold off on that. People want lower prices always. They're afraid. But, you only need to look at kind of where we came off that top. And, we hit a 77% decline. How much more do you want? Yes, I know prior cycles did sort of 82, and before that did 86. But as you can see, these returns have been diminishing, and the move from the last low to the high was nothing like the prior one. So we're seeing that, and you should see that diminishing kind of effect on the downside as well. So bear markets, 77% is a lot. The next bear market will probably be a lot less than that. Same on the bull side. And so that is something we need to understand. Another reason why this 4-year cycle is confirmed, well, simply look at the timing. And the timing has been extremely accurate. Forget what goes on in between the trough to the next trough, or the trough to the peak and to the trough. If you look at where these 4-year cycles topped and where they ended, they have been extremely consistent. Even the last cycle is a perfect example. The move, the extension to a high, did not pan out maybe as I expected, as many expected, but from a timing standpoint, which is really what my focus is mostly about, it hit perfectly. 35 months to a peak from the last trough, 35 months to a peak in 2017 from that last trough, 46-month low, 47-month low, 49-month low. Relatively, or extremely actually, consistent in its structure, and that is mostly what I'm basing my ideas on. People can say, well, you didn't hit 160, 170, 180 last time. It doesn't really matter. What we're looking to do is get in at a reasonably low level in the cycle, get out as much as possible at a reasonably high level, and rinse and repeat, rinse and repeat. We did that right at the peak in 2017, and then got in right at those lows in 18 in December, got out some, but not enough, but got out enough in the end here at 21, and then got in here at the lows. That's all we want to do here, mostly. And then once we get our positioning right and we have the right position, then we want to focus on the execution part of the cycle. So the entry and exit, obviously most important, aligned with the cycles, but then we want to go into that that disciplined mindset, of understanding the time frame that we're investing in and then executing to that, which means not falling for the volatility traps and all the news and the sentiment that's out there. And what I'd love to hear is, all over Twitter, all over social media, all you hear about is how Bitcoin, how crypto in general is going to be completely locked up or shut down. The rails, the on-ramps and the off-ramps are being closed. And the SEC is after everybody and anything in this space, and how it's going to be a disaster, and how the Fed is still raising rates, and how the banking sector is going to collapse, and how the economy is going to go into a recession, and so on and so on and so on. And if you really think about it, these are just narratives that are built upon mostly fear, and the market, despite all that, is up 60, 70 or 70%. Some of you who want to believe all those negative narratives and believe that we still will see lower lows, call this a bull trap or a bear market rally. And so be it. You can believe that, and I'm not here to say that it's not a possibility. Any sort of outcome is always a possibility. I think I've been very clear from the onset of this series that any sort of projection that I outline here are possibilities, and we need to be prepared for all possibilities that happen. But at some point, you need to focus on a strategy that works for you. And for me, this is a strategy that's worked for me in Bitcoin, but also other asset classes for many, many years and more than a decade as well. So I stick with what I know, and then I take a mindset that I have an edge or a tool that works really well, but is not foolproof, that is not absolute, and that I need to worry about the size and position that I have to be able to to see that through, but at the same time be able to respond if it's not really coming or progressing as I expect. But right now, just like the last cycle, this to me is the very early phase of a new 4-year cycle, and that over time we're going to continue to climb this wall of worry, and eventually, once price moves higher, you'll start to get a lot more believers, and all of a sudden the narratives will change from extremely bearish fear, doom and gloom, to, hey, this is great, this is a new bull market, we're going to make a lot of money. And all those narratives will suddenly change. All the YouTubers out there and everybody else, not picking on anybody specifically, will change their tune because sentiment in general has changed, and that's just fulfilling in many ways. And that's really what cycles are about. They are ebb and flow of sentiment, and what we try to do with cycles is to identify as early as possible changes in that sentiment, in the trend, and to be ahead of the curve as much as possible, both from a top and from a bottom perspective. Just flipping back to this cycle for a second, something I forgot to point out. Here was a key level right there at around that sort of 25,000 level. Kind of zoom in right there. You had those 2 candle highs right there after that massive decline. That was the first sort of 3AC kind of drop over the summer. Coming off the first big drop from the bull market top. Here was the main liquidation capitulation event during that. Then you had that sort of 4 to 5 month period of distribution, mostly a lot of selling in there, and here's that final kind of wash up. But those 2 candles right there, and also this candle last month, this February candle, both hit that level and found some resistance. Then you had this big shakeout just a few weeks ago, back down to 19. I think all the bears got excited again. But the fact that that held was extremely important. And now this candle has shot up and taken out that 25,000 level is pretty much that nail confirming the new 4-year cycle. This closed this month, although we've got another couple of days left. But this green candle right here, to me, is the confirming candle, along with other indicators as well, that the 4-year cycle is young and new and only 3 months in, and in theory has another 30 odd months to a right translated cycle high, and maybe only 12 to 15 months to a left translated cycle high. That idea whether or not this cycle will become left translated or right translated is too early to tell, and not something I want to go into during this video. I think in this video, what's more important is to understand this turn in the cycle. That's the major event. It only happens every 4 years, and we've got that turn right here. So let's focus on positioning, getting in, and getting that mindset, just like you would have had early on here, that it's difficult to believe that the market has turned. Again, with all that negative sentiment, all that negative news that's percolating out there, it's very easy to not believe that we've turned the corner. So it's important right here to to find that conviction and to establish position, if you haven't already, in preparation for the next cycle. Then, as the cycle progresses, we can look to begin for clues and structure on if this cycle is heading for a left translated cycle high or a right translated cycle high. I have my suspicions. It's too early to share, but possibly the next video in a couple of months, we could spend some time in more depth going over what a left translated cycle would look like for the longer term Bitcoin, or a right translated cycle. But for now, month 3, we should have, in theory, even in the most bearish of cases, probably 7 to 9 months of a market trending higher. Then we can worry about scenarios to combat against a possible left translated cycle. All right, so one thing you would notice if you go back and look at charts is that some of these 4-year cycles, I think both actually, the last 2, sort of tested those lows at some point after get going. So in this case, this was a COVID kind of crash that came all the way back down to get to that level, but that was a year from those lows. And to me, this was a true black swan event that without sort of the COVID incident, that price was never going to get down to that point. I think it had already sort of bottomed out at this point, and I think that's evident by the way it rebounded sharply, and within a month was already back and above those levels. For me, this was more of a rounded base that was a consolidating period that was really a result of a massive early move out of that 4-year cycle. As you recall, from 3,000 up to 13, which wasn't too far from all-time highs, just in a 5-month period. That move happened far too quickly and needed a lot more time to consolidate and to rebase in preparation for that final move. So if you look at this last cycle here, price never really came back, if you can make the argument that it only came back to the 6,000 level. A little bit different here back in 15 when you had that 4-year cycle low. It basically went sideways for many months. You had this move up here that was probably where the cycle really got confirmed, although it wasn't very definitive. That was like 5 months later. You still had a 40% decline down to those August lows around 7 months from the 4-year cycle low. That took out all those candle lows. So that is a possibility as well, having a move in the future come back to sort of test this area. But each time the 4-year cycle low got started, it was never breached again. So the fear from here that we're going to make a move back below sort of 15 or 16, mostly I believe is unwarranted. Although again, just stressing that we can never say anything in an absolute or be 100% sure. But in my opinion, we already had a shakeout 2 weeks ago with this sort of 20% move. Retesting possibly kind of the lows of all these candles around 19 at some point here over the next month or two is a reasonable possibility. Not one I place a high probability on, but it's out there. And it's important to understand that if you look at Bitcoin's daily or even weekly chart and go back over the last 10 years, what happens very consistently on a 60-day cycle basis is that Bitcoin goes through these liquidity events or volatility events, more likely, that send Bitcoin down on average around about 25% to 30%. And that also occurs, and actually occurs more frequently in bull trends. So during bull trends on these 60-day cycle timeframes, you get consistently 30% drops. So 30% drops at this price level is $6,000 to $7,000, $8,000 declines. Just like we saw a few weeks back when it hit 25 and went down to sort of 19. Those are events that you're going to have to embrace and appreciate as a hallmark of what Bitcoin does in general. So these two kind of come together. Do we test prior lows? I don't think so. I think we can test 19 again. But in my opinion, there's more of a risk that this market continues to go higher, that breaks through 30,000 and makes a run up towards 40,000 before sort of exhausting in the short term and then pulling back kind of that 30% that gets it back into the high 20s. Then there is a chance that we're going to hit 19 and below. Both are possibilities. Both should be something that you're aware of and at least appreciative, so that way if it does happen that you know how to respond. But really what is important to understand is that more frequently we do get these volatility events. We do see Bitcoin fall. Again, even in a sort of a rising trend, you see these 30% declines all the time. And if you're following the 4-year journey, it's an investment over a 4-year cycle period. Therefore, you're making very tactical buys as early as possible, and then you're scaling out as it gets far more, the sentiment becomes extremely giddy and bullish. That's when you want to start scaling out. But in between all that, the concept is here that you're not getting cute on these moves, right? You're not looking to sell once the market gets a little ahead of itself, just so you can pull back later on. Because often what happens is that you get left behind and all of a sudden you're buying higher. And then you buy higher having sold lower, and then that's when it actually pulls back. Then you start to get into this sort of game, this emotional game where you're fighting yourself. Even though the market is trending higher, you're constantly sort of trying to buy a dip or predict a dip that's coming, and it doesn't happen. You buy higher, then you panic when it does drop by 30%, then you buy back in later on, and eventually after doing that a number of times, you might be still up, but you've just given away so much of the open profit that's there, and you would have been far better served just simply holding that and understanding that you have not just a multi-month, but probably a multi-year time frame for when you're looking to sell that position in the future. And if we're looking at gains, again, I don't want to throw out numbers out there, but if we're looking for at least an all-time high, let's just say that if we're looking for an all-time high and you're getting in at the 17, 18,000 level, right, and you're looking for an all-time high, you're looking at some pretty big numbers from an investment standpoint, even for an asset class that's beginning to mature like Bitcoin. But compared to traditional assets, something that you just can't find anywhere else. So you want to just capture that gain. That's what you're looking for. You're not looking to take a 20% decline, sell at the local top and buy at the local bottom. If you're a trader, of course you're going to do that. But we're not talking about trading here. We're talking about I don't want to use the word everyday folks, but just people who want to take and get exposure to the asset class and not have to worry about day-to-day and week-to-week swings, get in low and ride that momentum and get to a point where you've established what I call strong hands, where you've got a position that's up well, and understanding that refreshing your portfolio, often being up 60, 80, 120, 180, 200% or more, is not going to serve you well, because it's going to throw you off your game and the discipline that you need to head up towards an all-time high and hold the majority or all of that position to the point when the cycle begins to give us those signals that we should be at least scaling out of some or getting out altogether. This is nothing new to the videos I've been talking about for the last 4 years. After getting in 2018, essentially every video has talked about the same concept. So go back and watch a lot of those. I don't want to keep repeating myself in every single video, but really we're trying to simplify this game as much as possible. We don't want to become traders. We want to ride these cycles as best as possible, and we want to simplify the amount of trades that we're doing. And I think by doing that and doing that well, buying at the right time, selling at the right time, and the third thing, having the discipline and the patience over a long period of time to hold for that cycle. Just do those three things really well, and I guarantee you're beating, regardless of what they tell you on social media, you're beating 98% of those traders out there, or people who call themselves traders. I can guarantee you that. And it's going to be far less stress and more profitable for you over that duration. So my closing 2-3 minute sort of pep talk here is, of course, stay the course. We waited patiently for 14 months during that bear market decline to get in. We're in position now. It looks pretty clear to me that the 4-year cycle is in. Yes, there's a lot of fear out there, and some of it perhaps might be warranted, but the price action is telling us otherwise. We have to prepare for possible moves back. Yes, volatility will be real. We will see 30% declines often. You may even see a 40 to 50% decline at some point. If Bitcoin hits 35, 38, 40, getting back down towards 21, 20 even, again, is a possibility. We're going to have to be prepared for that. You can't position yourself on the expectation that we'll drop 40 and 50%, thinking that you'll avoid all of that and get in lower. It doesn't really work that well. Yes, sometimes you get lucky, but you also have a situation where if you do sell, like I mentioned before, in expectation of a major decline, that the market does something opposite. Just like what it's been doing over the last 2 or 3 months. A lot of people haven't seen it coming, and now they're waiting for the pullback to get in. So just like the last 4 years in the last cycle, in the early phase, you want to position yourself to stay the course. You want to get a reasonable position. If you go too heavy, thinking you're going to make just absolute killing, life-changing money by just putting everything you have in, my experience there is that the position is too big and you're going to be focused too much on the volatility, and you're going to end up trading when you were looking to invest and being thrown off at the wrong time. I don't think that will work well. You're better to have a smaller position that's meaningful, that's sizable, of course, relative to your net worth, that you can hold for the duration and focus on the discipline more than anything else. So videos in this 4-year cycle series will probably be further apart. And the reason for that is I want you to go back and just watch prior videos. Essentially, I've repeated a lot of the same themes. This isn't a difficult or complex strategy. Okay, what's complex is fighting self, fighting your emotions, and focusing on discipline. That's where the alpha is. Stop looking out there for magic signals and magic indicators. They don't exist. Everything has faults and flaws. But really, where the main problem comes in, or where the main potential for gains lie, they lie in your actions and how you execute on those actions. And actions are a result of emotions. Focus on who you are and what your goals are here. Develop that strategy. Stick to it as best as possible. If you need to play around with some other coins or some whatever it might be, create a separate account on a different exchange and play around to your heart's content. But keep that stack for the 4-year cycle in self-custody, off an exchange, in your control for the duration of the 4-year cycle, and do that well. The market still has to deliver in the end, of course. Of course it has to. We can't control that. We can only be in a position to take advantage if the market responds favorably. And if the market responds favorably, you want to be there to take advantage. Wishing you all the best. Thank you very much, everybody. I appreciate it. Take care.